I think it's helping today, but do I think it matters longer term? I think less so. Last time we had the shutdown, it wasn't nearly as damaging to equities as I think many people had suggested. It's certainly painful for those caught up in the crosshairs, but in terms of the impact on the economy, we don't really see it having much of an impact.
Rick, we've been looking at the dollar a lot recently. It's had, I think it had 8 days in a row of gains, today giving up some of that ground. It doesn't seem to hold that ground above 97 for long when it gets there.
No, it really doesn't. As a matter of fact, if you look at all of 2018, what you'll find is in November when we made the high for the last year, it was a close of 97.54 with a little grouping, a little before and a little after that reflects that sentiment. It just gets up there and it just doesn't seem to hold. Now, if we get a close above those 2018 highs at 97.54, I would be more optimistic. But I think the real issue is much of the strength in the dollar index comes at the behest of the euro currency. And unfortunately, close to 58% of the dollar index is the euro. So it's like swimming in a circular pool, Wilf, and think you're going to actually get out of the zone. You're not going to. You're always going to hit an edge. And I think that gives this index a little less horsepower. There's so many other ways some strategize on strength of the dollar, whether it's trade-weighted and a variety of other indices. But just on the face of it, yes, a close above that level I think would be quite bullish in the big picture.
Clearly, equity investors are watching the dollar. It feeds into the question about how much earnings are slowing. More and more people saying we're going into an earnings recession. You guys say that's exaggerated. Why?
Well, I'll say I agree with them. When you look at the first quarter numbers, right now you're seeing something that is essentially zero. But let me give you two ways of looking at it. Last year, we had success from really large companies that were growing very fast. Think of them as the FANG names, the social media names in oil. They were very strong, very big. 2019, they are evaporating. So this is unprecedented in the sense that these large companies are no longer seeing the same strength. The other thing I would say is taxes. Big benefit in 2018, added 7 to 8% to the bottom line. It actually becomes a drag in 2019, so that is subtracting more growth as well.
So are you saying this so-called earnings recession is being distorted by some big cap stocks? And in fact, if we look at the number of stocks that aren't in that camp, it's more than those that are.
I mean, I think you hit the nail on the head there. If you look at the median company, we still see median bottom line growth of 5 to 6%. That isn't feeling like an earnings recession. We have revenues growing 3 to 4% for the median company. So that means we're getting operating leverage. There's not a margin problem in there. So for those who look at the headline number and say, we are seeing a problem, it is not felt by the typical company in the S&P 500.